Hey friends, thanks for tuning in to our Master the Market segment. So last week was yet another wild one. Good news, inflation is absolutely heading in the right direction. Those were some anemic prints. In fact, the last few months, if you take a look at Core PCE, the Fed's favorite gauge of inflation, we're likely to have a run rate at 1% annualized over the last 3 months. So inflation really has been low and beneath expectations. But on the other side, we just had Israel attack Iran as we headed off into the weekend, and that brings an entire layer of uncertainty. Normally, the bond market would improve, right, on geopolitical risk. But the problem is that energy prices soared. They were up like 12% just on Friday alone into the mid 70s when they were just in the 50s not that long ago. So that carries this inflationary component, which the bond market is not liking. And so now this week, it's all about the Fed. With this new uncertainty out of the Middle East and energy prices soaring, there's absolutely room for the Fed to cover and not cut rates. But when you look at some of the other numbers, inflation, the neutral rate, which is a rate that neither helps or hurts the economy, all of those are well beneath the Fed funds rate. So there's increasing pressure for the Fed to cut rates in the coming months. We'll have to see what they say. And then on top of that, what we will get is the updated summary of economic projections, their forecast on rates, the economy, unemployment. That'll be the big market mover. Hey, have a great week. We'll talk to you soon. Bye for now.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.